eToro Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Monday afternoon. I'm Nadine Blaney and it's a pleasure to be here with you on the 21st of July. Now, when it comes to this market, we saw record heights being achieved last week on Friday as well. Today, not so much, as you can see, coming under pressure. That's the COB Australia Index. Trade has finished on that particular index, although we do still have some trades going through the S&P ASX200. I dare say nothing much is going to change because it was really flat, not a lot happening through this afternoon period. What we have been seeing as far as the dynamic goes is profit taking in the banks, some selling in the banks. But the miners are actually doing quite well, not only because we have production reports, but because we're watching the price of iron ore looking really sweet. It's up, in fact, around 4-month highs. So that has brought, the usual suspects, you could call them, the likes of BHP up by 0.6%, Rio doing well, up by 1.5%, but it's Fortescue that's leading those big iron ore market miners higher. It's up by 1.7%. You know what else is looking pretty good as a sector is the energy space. So Woodside up by more than 1% and the coal miners as well. So look, our key themes today, profit taking in the banks. That's a pretty punchy fall for CBA, off by 2.75%. Westpac is down by 3.6%. NAB is actually the best performer, off by 2.5%. So the banks, we've got Block being one of the best performers by percentage change, and that's because it's going to be included in the S&P 500 Index. And of course, we've got the big tech names reporting later this week. That's what I'll chat with my guest about, Josh Gilbert from eToro, who's standing by. So let's just roll through this. We'll be having AGM being held by Macquarie later this week. Consumer discretionary names coming under a bit of pressure. I, though, had a good conversation with Chris Stott from 1851 Capital this morning, who told me one small cap retail company that he's pretty keen on. You'll have to go to the website, ausbiz.com.au, to look for that interview. Chris Stott from 1851 Capital. There's a prettier picture. South 32 out with its production update, helping to drive that share price almost 5% higher. You know what else did well today? AMP. It rose more than 10% to a 5-month high following a strong second quarter update. Its superannuation arm posted its first positive net inflow since 2017. So platform growth and higher assets under management there. South 32 gained after reporting it achieved 102% of its full-year production guidance, buoyed by solid output across key commodities, including copper in the June quarter. Also manganese production in Australia getting up and running. Insignia Financial fell after telling investors it remains in talks with that bidder, CC Capital, stressing still no certainty the discussions will lead to a formal offer. And there you go, there's Block up more than 11%. In the smaller end, Antiotech soaring up by 23% on a deal with the US-based battery materials maker Black Diamond Structures to jointly develop and commercialize battery performance products in the US. Plateside Studios shoots up on a headcount cut and a smaller full-year loss estimate. Regis Resources, though, slid on weaker quarterly gold output, and in broker moves, WiseTech share price gained as Jefferies lifted the price target and its earnings estimates. It says that WiseTech's expected cost saving of $50 million is very conservative when it comes to the E2Open acquisition. It says that revenue synergies should provide further upsides, as both firms have very complementary products to each other. And Eagers Automotive, UBS has lifted its price target but downgraded the company to sell. So there is a quick tour of markets, of sectors. Let's get specific with Josh Gilbert from eToro. Hey, Josh, good to see you on this Monday. What stood out to you in this Asian session today?
Yeah, hey Nadine, great to be with you. I think, to be honest, probably maybe the the velocity almost of the sell-off that we had on the ASX today. I think if we look at US futures, obviously a little bit higher today, and I think given the sort of the week that we had last week, it was a great week for the ASX, obviously hitting a record high. I think it's just a classic case of sort of profit taking, especially when we've got reporting season just around the corner. I think investors may be looking to lock in a few gains. And I also think, maybe just reassessing whether, those earnings can justify that sort of optimism that we're getting from the market, right? When you're at all-time highs, that bar for earnings is then higher. And I think that, there's this expectation now that companies have to live up to what are slightly lofty valuations. And I think that's why we've seen the financials come off, by as much as they have today. And one of the reasons why, the share market has come under, a fair bit of pressure today.
All right, so it's the old school, the banks and the miners that we're keeping an eye on here locally. But when we look overseas, you cannot look past some of these big tech names that report this week, the likes of Tesla and Alphabet. So can you run us through expectations for Tesla, please?
Yeah, I think with Tesla, look, it's a name that is loved by retail investors, firstly. But I think, look, the optimistic scenario here is that it may be able to sort of please from, an AI, robotics perspective, robo-taxi, those types of things. But realistically, expectations are low. Vehicle sales have come under pressure recently. Global deliveries at the start of the month for the quarter came in 30.5% lower year on year, missed analyst estimates. And as we know, right, Elon Musk is the main man when it comes to sort of Tesla, and we know that he's been very distracted, whether that's coming from, his role in with Doge, or whether that's him, looking to sort of spark up a new political party. Either way, he's sort of been distracted. One thing I would say is that he has done that for many years, whether, it's having multiple businesses running alongside Tesla. It just feels like he's sort of taking his eye off the ball, a fair bit. There's also now question marks over, Tesla's cash being used, to sort of invest into his private intelligent AI company, which is XAI. So that'll be interesting to see if we hear anything about that. As I say, though, the focus is going to be around, I think, robo-taxi, that autonomous driving. That's what we're going to be watching closely, because really that is, I think, the pillar of Tesla's long-term sort of growth story here. We're sort of, maybe the market is now sort of moving away slightly from, how many EVs it can ultimately deliver. So market's looking for earnings to fall by about 20%, revenue to fall by about 11%. So I think any slight beat there might, be a little bit positive. But I think with, fundamentals coming in pretty weak, those sort of leadership distractions, and obviously those delivery shortfalls in focus, I think this is a big call for Elon Musk. And as I've said a few times on the show in the past, I think he's going to have to deliver some Musk magic if he's going to sort of turn around Tesla's fortunes in 2025.
Ooh, I might borrow that, use it in a headline somewhere. Josh, as the week progresses, what about Alphabet? I can only think that AI will be one of the key focal points for the market, and spend on AI, importantly, as well.
Absolutely. Yeah. AI, as we know, for these tech companies is what's going to really be the focus. For Alphabet, that's going to come alongside cloud and YouTube as well. We're looking at it, Alphabet, pretty interesting. It's the cheapest stock of the Magnificent Seven on a forward PE basis. And I think, that saw a flurry of broker upgrades last week, with sort of some growing optimism, I think, around what they've got in AI. But where AI is positive for them, there is also, the area of the business that comes with the risk of AI, right? There is this slight concern that the long-term impact of AI technologies will then have an impact on, Google search. So the increasing use of people using ChatGPT or similar AI platforms to assist them in sort of gathering information and recommendations, those types of things. We've also got that regulatory pressure coming through for Alphabet as well. We've got a decision from the DOJ expected to come through regarding Alphabet's sort of structure of the business. That could call for them to sort of divest Chrome away from Alphabet as a business, and that could ultimately bring in some question marks around its search dominance as well. But as you say, I think really the key point here is going to be around that sort of capital expenditure. We'd expect them to lift full-year capex. We know that big tech is in this sort of arms race to scale infrastructure for AI. Meta just announced a huge sort of new build on AI infrastructure over in the US. So I think with demand growing so much, it's kind of almost spend or get left behind. So yeah, CapEx really going to be in focus. Google Cloud is really the number that drives that. Market's looking for about 27% year-on-year growth there. And I think if they can, deliver on Google Cloud, the market isn't too worried by increasing CapEx. If they can give us some, solid margin guidance alongside a solid search number when it comes to revenue, I think it could be good news for the stock.
All right. Well, we will be watching out with much interest. As far as economic data, the big one, I guess, tomorrow is the minutes coming from the RBA, which will be interesting to see how much it reveals about those dissenters when it came to ultimately what was a decision to hold rates. But we also hear from Powell this week. It's going to be an interesting one because of the political pressure that he's under, because the data in the US is also looking pretty good. I mean, even consumer sentiment from the University of Michigan lifted on Friday.
Yeah, I mean, look, the battle between Powell and Trump is obviously sort of something I think market watchers are keeping a close eye on, in the sense of how that's sort of really going to spill out and affect market confidence, right? When we've got markets trading at record highs, the last thing you really want is the US president and the US Fed chair sort of going head to head. I think it really brings into question marks over that sort of independence, right? Especially when we think about, the pinnacle of, the Fed being the pinnacle of central banks. So it'll be interesting to see what, he has to say, this week. Whether he touches on it too much, I'm not sure. Obviously, there'll be question marks. He's probably not going to go into it too much. I imagine the last thing he probably wants to do is to probably poke the bear anymore when it comes to Donald Trump. We know that's probably not the best idea. But I think maybe a sense of calm, from Powell would be good. And I think that would help reassure markets. But ultimately, we believe he's done a great job so far. It's probably one of the hardest jobs in the world for probably not the best amount of money. And so we believe he's doing a pretty good job right now. The sort of the data that we've been getting from the US, as you say, has been sort of pretty positive. We do believe that we'll get a rate cut in the back end of the year. But, they're data dependent. I think so far, although Trump, says different about sort of bringing those rates down, we believe that, he's sort of managing this situation, pretty well. We don't believe that he will be removed. We think that will, he'll continue to stay in his position until sort of May next year, which is, when his contract or his time is up. So we think that it will sort of, this sort of level of uncertainty will sort of will ultimately move away at some point. But for now, it's still a bit of an overhang, and maybe some, reassuring comments from Powell this week might help markets.
All right. Well, Josh, thanks. That was really great, really instructive. Thank you for getting us across it all.
No, it's a pleasure. Have a great week, Nadine.
Yeah, have a good week. I mentioned Block, best performer by percentage change on the 200, and it was the stock of the day. So for some analysis, I spoke with Grady Wolf from Bell Direct and David Lane from Ord Minnett.
Honestly, I just can't fault the company. It's phenomenal. But I would probably, I'd probably put a buy on it. There's serious upside potential. You've got NPAT margins at 12% and there's profit to gain on the company. So, the market loves it. I like it. Yeah.
So I think that there is a lot of momentum behind Block, and similar to Grady, we don't actually cover it officially, but I think given momentum is behind it, I'd be willing to be buying it at the moment.
That wasn't the only double buy coming through on that episode of The Call. If you'd like to know what other ones Grady and David agreed upon, you'll have to watch the episode. You can find it on our website if you're not there already. It's ausbiz.com.au. So let's get across some of those other market leaders. There's Block, Liontown Resources. I think that's going to be featured on The Call tomorrow. There's been a little bit of a run in lithium as of late. Up by pretty solid 11% AMP in the wake of that quarterly update. There you go. There's lithium again with PLS. And South 32 in the wake of its production report and resuming manganese exports from Australia. Some of the laggards on this Monday afternoon, Pinnacle. So Pinnacle is out with its reporting season date. I think it's August the 6th. Eagers Automotive on that downgrade. Nuix did well last week. But Mesoblast just giving up a little bit of that. I think it was a 30% gain for the company on Friday on revenue coming through from the sale of its drug, Roncasil. All right, in the small to mid-cap part of the market, Tivan, it was out with an announcement today, and Linden Resources. So mostly resources there, if not all. And on the second page, American rare earths. So we had a rare earths update coming through from China today. That's down by 11%. Vinyl shedding 8.7% to 11 cents per share. So what's happening tonight? Well, no sort of top tier data. This week, we are looking for global PMIs. We're also looking for an ECB decision and any more Fed speak to come through. But pretty quiet tonight. We're expecting to see that leading index fall by about 0.3%. Tomorrow, I mentioned those RBA board meeting minutes. That'll be an interesting point for the market to digest at 11:30. What was the conversation around cuts? Why did the holds win the day? And we get the New Zealand June trade balance after the CPI read that came through today, weaker than expected. So let's recap this close. I think what Josh said about the velocity of the selling here locally was pretty unique, down by more than 1%. And yeah, I was watching futures in the US throughout the day today. They are still positive for S&P 500 and NASDAQ E-minis. We will be keeping our eye on European markets. So far, so good, not so bad. At least in London, we've got some small gains on the screen, and around the Asian region. So it was really Australia being the exception to the rule. Japan's market was closed, of course, probably a good thing in the wake of those elections, which did see the incumbents lose the upper house. But, you know, the composite in Shanghai is up by 0.6%, and the Hang Seng is up by 0.5%. So, yeah, interesting session. Lots to talk about. We'll have lots to talk about tomorrow, no doubt. We're live from 9:45. I hope you have a great night.